I love the fact that there's a burgeoning boom of interest in buying and operating small businesses.
Yes.
I don't, I don't love like, if you're financially independent, I think you'd be crazy to go and buy a small business. But if you're just getting started in life and you don't like your, the line of work necessarily, the career track that you're on, buying a small business is a wonderful way to seize control of that and have a shot at really high income.
Alrighty, folks, he's back. Yes, we are lucky enough to have Scott Trench back, author of Set for Life. And before we get into the 7 core tenets of Set for Life, I got to ask, Scott, what the heck? You're not CEO of Bigger Pockets anymore? What's going on?
Yeah, it's been a big change. I was going through my schedule this week because we got ahead on some of the recordings for Bigger Pockets Money. I'm still doing the Bigger Pockets Money podcast, of course, but my friend wanted to schedule a meeting with me, and he was asking for my availability, and I said, "Well, I'm free all day Monday, all day Tuesday, all day Wednesday, all day Thursday, and all day Friday. Do any of those times work for you? If not, I have similar availability the following week." So this is a new experience for me in my adult life. Of course, I will have calls. I have this call today and those types of things. But it's just a wild situation. I'm sitting here and I spent so many times on Zoom calls as CEO because and when you're on a Zoom call as CEO, somebody has spent the last 2 weeks preparing materials for your review. So you've got to be completely engaged the whole time. And I actually developed a tech neck where I got a crook in my neck from sitting around all day in these things back to back to back, 1-minute bathroom breaks. And this went on for years and years in a row, really since COVID and the Zoom calls. So I'm like starting to like loosen up, I'm down like 2 pounds, but
nice.
Yeah. So there's some good that's going on with the changeover. So
yeah, I can actually see it in your face, right? You and I have talked now, I don't know, call it half a dozen times or so, and you are at least appearance wise less stressed. Looks like your quality of life is heading up. Obviously, last time we talked, you had a little baby in your arm, as I recall, and it must be good to be primarily a full-time dad. How's that feel?
Yeah, it feels great. So, and don't get me wrong, I loved being CEO of Bigger Pockets.
Sure.
Love Bigger Pockets, passion, purpose, all invested in Bigger Pockets. So it was a fantastic run as CEO, and maybe one day I want to do that more full time, hardcore, intense management or executive experience. But it is kind of like a little bit of a weight coming off to not have that role right now. And so there's a little bit of that going on for sure.
Oh, very cool. Very cool. Well, let's get into the topic at hand. You're very passionate about Set for Life. I think you set the standard for letting people understand they kind of control their future if they really want to take ownership of their own future. Why don't we get into your 7 core tenets? Number 1 you have is investors never spend the principal. Tell us about that one.
Yeah, well, I think so the goal of, there's a little bit of a paradox here. Now that I wrote these 10 years ago, and the 7, I'll just go through them real quick and then I'll answer your question. But they're never spend the principal, reinvest most of your returns, accumulate and deploy your own capital. Your returns are not correlated with the effort that you put into an investment. Right. A lot of real estate investors, for example, put in a lot of effort and then interest rates rise, or bet market timing, or the deal quality. They overpay. Like, those things matter way more than however much sweat equity you put into those properties, although you may get paid for that sweat equity. And then investment returns are correlated with knowledge. The more you know, the more you can avoid the really big things that can destroy an investment or take advantage of the big opportunities. You don't confuse volatility, the ups and downs of the market, with risk, which is the long-term possibility of total capital loss. And the best investments are almost always specific items to your situation. Like, Mike, your best investments probably aren't in real estate. They're probably in this very specific little things that go on with one rental at a time in that business that is specific to you. The extra dollar deployed there could probably generate a 10x return compared to the 12 to 15% that we can aspire to long-term as real estate investors in the market. So that's kind of the overview of it. And there's a little bit of that that's at odds with kind of the research that we talk about with the 4% rule, for example. The 4% rule is a standard financial planning rule of thumb where one can safely spend 4% of their portfolio, a mixed stock bond portfolio, for example. So if you want to spend 100 grand and you have 2.5 million, you can spend 100 grand and adjust upwards for inflation, basically for life, with an exceedingly small risk of ever running out of money. So it's the common answer to, are you done with the journey to financial independence? And the never spend the principal tenet of investing is at odds with this philosophy, but in line with most investors. We polled most the Bigger Pockets Money audience recently and said, have you ever sold in a non-emergency situation any long-term investment for any purpose related to consumption or lifestyle? And 80% of folks said no. And this is a widely established retirement statistic. Most long-term investors really have trouble spending the principal, and I think for good reason. You never want you never want to harvest the golden goose. You only want to harvest the eggs, right?
Yep. Yeah. I think there's so much in this. I guess one question before we kind of dig into the 7 of these I have for you is Set for Life has been out for a while. If you were going to release the book this year or over the next, maybe, January of 2026, what would you add to it, you think? Have you ever thought about what you would add or want to change in the initial version for today's environment?
Yeah, we did an updated edition maybe 2-3 years ago, and I updated a bunch. I was like, I was reflecting on it when I wrote it, and I think it was like 31 when I updated it, 32 maybe, and we just had our first kid, and I was like, I couldn't have wrote this book now. And I kind of knew that when I wrote Set for Life. I wrote Set for Life when I was 26, 27, somewhere in that range.
Wow.
And I knew at that point in time, like that was the whole point, is all the folks that had written these books on wealth building were, a little older, more established, very wealthy. I was not that wealthy. I was just kind of on that cusp of kind of just having achieved technical financial independence, right? And that 1 million-ish, maybe a little around there, net worth mark, a little above that. And depending on how you want to value real estate and Bigger Pockets interest and those kinds of things, right? So I was in that situation, and I remember saying to Josh Dorkin, the founder of Bigger Pockets, my boss at the time, that there wasn't a book written by someone who was right there, because you forget, I forget 10 years now about just how hardcore I was at that point in time, right? I was literally biking to work every day with a rainproof bag with my packed lunch and my rugby cleats. I would bike a 5-mile triangle to work, then another 3 to rugby practice, and then another 6 or whatever it was, how the triangle worked, back to my house in kind of the up and coming neighborhood at that point in time. And I would make breakfasts for myself, and I would read a business book a week, and I would, stay late at work and those type of and obsess over it. And that's just not what I'm going to do. That's not what a reasonable 34-year-old with a family will do at that point in their life. And so I acknowledge that in the foreword to the updated Set for Life book. I say, I could not have written this book today as a 32-year-old, now 34-year-old, because of that dynamic. It is hardcore. It is an all-out approach to early financial freedom. And I actually updated the title. I think that the previous subtitle was Dominate Life, Money, and the American Dream. I did not come up with that subtitle, by the way. But I was like, I updated that to an all-out approach to financial freedom at an early age, because that's what it is. And so I think I updated some things for tone. I updated some things for inflation. My 26-year-old self did not understand why my 34-year-old self would not house hack, would not live super frugally to get ahead. There are more important things after you grow up a little bit than the attainment of early financial freedom. But for a 24 or 25-year-old or 22, whatever, I think it is really a great approach to getting ahead in life. And there are such lifetime advantages that I feel like I'm now able to reap for having done essentially the playbook from Set for Life in my 20s. So how's that? Is that your question?
No, I think it's great. I want to dig into this a little more, because as a content creator, somebody's been talking about real estate, building wealth for, 8+ years now. I still hear a lot from the folks in their 20s, and it really borders on, many of them are kind of giving up, feel like the world's set against them and it's impossible. And others kind of, to your tone in the original, was, I'm just going to get after it come hell or high water. And to that end, I think house hacking is a freaking cheat code. If you're, in your early 20s, get in for 3.5% down, find a way to live for free or nearly for free. And it just de-stresses the whole situation.
Yeah, absolutely. And it's kind of remarkable how many folks who have gone on to incredible success house hacked in one form or another, like Ben Franklin and
Mm-hmm.
what's the guy who owned the Mavericks, Mark Cuban, right?
Cuban, yeah.
And a lot of these folks have done some version of that, or at least lived uber frugally to get things started, because
Mm-hmm.
it's so important. It all works together. House hacking is a means to living ultra cheap. And when you live ultra cheap, you don't have to optimize for the base salary. And I feel like the base salary is a trap for a lot of people. It's obviously not a trap for a high-powered lawyer or a doctor or a dentist or someone that is able to earn in that 250 plus 300,000 plus range. You're going to get rich real quick if you can earn like that. But for most people who earn like an $80,000 to $100,000 salary, they're just stuck because they've optimized for that. And if you can get your expenses low, then you can go down that path of earning 40 in a year by starting a business or entering a sales or whatever role that can then really begin to explode things over time. You can take on that additional risk,
Yeah.
which is not accessible to most folks. And that's why it's not, house hacking is the biggest single move to reduce your expenses, which is why it's so powerful. As a
Yeah.
tool.
Yeah. Well, another famous person who did a version of house hacking, I'll call it apartment hacking. You probably know this, but we'll put it on record, was Arnold Schwarzenegger.
That's
Right.
right. Yeah. Yeah.
He bought
He,
a 6-unit apartment building, and it really allowed him to hone his craft and find those right movie roles. So he was a millionaire before he became a famous actor, which not a lot of people get.
Yeah, and it's funny how you go down these rabbit holes of looking up these folks, who are self-made, and it's not all of them, but it seems like an extraordinary percentage of them did something in this world in the early days of their career.
Yeah, I couldn't agree more. I'm curious, if you had the opportunity, which I'm sure you do all the time, get in front of high school seniors, maybe college freshmen, that 19, 20-year-old, 18, 19, 20-year-old, uh, would you, how would you let them know they have all the power and they have options, and not to take this defeatist mindset? Because I think if you believe you can, you can. If you believe you can't, you can't. And, some of it's all just mindset that they have. How would you help them see what's possible?
Um, it's funny because I feel like because of the way my career has progressed, I have a warped sense of who these kids are. I see Gen Z as incredibly motivated, as go-getters who are by
Awesome.
and large making calculated decisions, who are understand the basics of personal finance. And the folks that I tend to come in contact with are the ones maybe who are most inclined to read a book like Set for Life or reach out. So I
Yeah.
just see an incredible level of motivation and advantage
Awesome.
where the playbooks are all there, and they take the good. Like Set for Life has great playbooks in there, the house hack, for example, but you can't quite do a duplex at 95% leverage like I did 10 years ago. So like they're able to you can in some cases, and it's still better than buying a house or just renting
Hmm.
for a long period of time in many places, but not all. But they'll take that and then they'll modify it and they'll say, how do I get a rent by the room location? I'm going to build an ADU while I'm like, they're able to figure out, okay, that concept now, the correct spin is this in today's environment to make the house hack work, or this is the right opportunity for me. I love the fact that there's a burgeoning boom of interest in buying and operating small businesses.
Yes.
I don't love like, if you're financially independent, I think you'd be crazy to go and buy a small business. But if you're just getting started in life and you don't like the line of work necessarily, the career track that you're on, buying a small business is a wonderful way to seize control of that and have a shot at really high income in there if you weren't going to, love it anyways. But I think I just, I think there's a little bit of wariness around, are you going to are you going to be happy fixing HVAC systems for the next 20 years on
Mm.
there? Well, you might be happier doing that than climbing the corporate ladder. But you might not. That's not really the goal of what we're trying to get here once we end the financial independence journey. But
Yeah, one
I
of the
love the
things
fast goal.
yeah, I love that as well. One of the things I'm seeing a big transition, certainly, I'm Generation X, my daughter's a millennial, and I'm seeing in Gen Z is there's definitely has been a huge pivot, right? When I was, a young adult, it was always go to school, get a good job, make a lot of money, right? Climb the corporate ladder, right? And oh, by the way, not just a college education, but you got to go get an advanced degree, right? I went in and got an MBA part time while working. That was kind of the Gen X mentality. Millennials, my daughter's generation, really carried that, but Gen Z, I don't know if it's the pandemic or COVID or what it is. A lot of them are questioning college, and a lot of them are like, "Why do I want to sign up for hundreds of thousands of dollars in debt? It really is an anvil on my chest. Why don't I go into the trades?" And Wall Street Journal and Bloomberg are picking up articles about the trades being the next millionaires, which I think is awesome.
Yeah, we talked to a guy on Bigger Pockets Money. I'll have to go look up the episode, but he basically went. He graduated. He graduated high school, and then he went to community college for 2 years, and then he became like he got like a Salesforce implementation job or something like that, something that didn't require a degree.
Mm.
He never made the mistake of financing a large amount of college debt. He never made the mistake of driving a very expensive car, and then he house hacked 2 or 3 times. And at like
Wow.
27, he's a millionaire. And it's like so. And there, of course, there's luck with housing and the timing of his particular graduation and somebody else. But it's like, oh my gosh, in an average situation, if you just make those three decisions, and this guy did not come from any advantage, and his story was incredible. Again, I'll have to send you the episode link or
Sure.
number there, but it's just like it's so if you have that playbook in mind by junior year of high school, for example, and you set those cards correctly, I mean, you can be done by
Yeah.
your mid to late 20s in terms of a retirement level of wealth. If you play a couple of cards right and have any luck at all in line with historical averages for returns. And so that's I think the power and the advantage of the Gen Z generation. I think the other side of it, though, is that if you don't do those decisions right, the gap is so massive between the person who went to college and got a degree that is not marketable, for example, that
Hmm.
has that debt and is now busting their hump every week for 40 to 60 hours just to kind of make ends meet and cannot accumulate. That's just a trap that will be a treadmill for life. And
Yeah.
that's the goal, right? That's why we do what we do is that's how do you prevent as many people as possible from getting in that trap. And if you are in that trap, it's such a
That
dig. It's like I don't
sucks.
have an
Yeah.
answer that's super easy for it other than to completely reset your life in a way that's
Yeah.
going to be very uncomfortable for many years in order to dig your way out of it and get on the right track. But
Yeah. I mean, it's really odd, right? I had 6 years, so I had 2 years at a JC, 2 years for my undergrad, 2 years for my MBA, and I walked away with, I think it was 47 or 48,000 in debt total for a pretty good education. My daughters went to an art school in U of Arts in Pennsylvania, and her education was over $200,000. It's like unbelievable the inflation that has occurred in college education. It's wild to think about. I am curious, as at least I'll say it. I think the college admission is down. I see less and less people buying into that. Got to go to school, get a good job nonsense. Doing more trades. I'm curious if we fast forward 5 to 10 years. I think that trend likely continues as AI continues to improve and all of that. Is that kind of track with what you're thinking? I think AI is going to really, I don't know, change college, change education from what it is today to something different in the future.
yeah, it's interesting. I wouldn't have necessarily said AI, but I think you're right. AI is a huge component of it. I would have said just in general, this I'll actually zoom back out and frame it this way. We had another interesting guest that we talked to named Preston Cooper.
Hmm.
Preston Cooper is a economist, and he computed the ROI of college for 30,000 degrees.
Oh
Right,
my
every
gosh.
degree that had above a certain threshold of students and history. And what he did is he compared the wages that they went on to earn with counterfactual, right? One of the big problems in understanding the value of college is the kid who can get into Harvard, who gets accepted into Harvard, is likely going to be successful regardless of whether they go to Harvard or not, right? The admissions
Right.
criteria, for all their flaws, are reasonable predictors of long-term success, at least in success as defined by monetary success. They're not perfect, but
Mm-hmm.
they do highly correlate. And so you have to use the counterfactual, right? You're not going to compare the kids who go to Harvard with kids who couldn't go to college because their grades weren't good enough. And he found that the ROI of college is there for many of these degrees, that the degree matters way more than the school, right? An engineering degree is way more valuable than a art studies or something like that, a degree. And he found that 40% of college degrees, if you can include the cost of tuition, the
Mm-hmm.
change in wages, and 40 years of that spread being computed at a 5% discount rate. So you can all beat up those assumptions there. He found
Mm-hmm.
40% are negative ROI, and
Wow.
60% are positive ROI. So the conclusion here is not that college is bad, right? It's that the degree matters more than the
Mm-hmm.
school that you go to, and that some college is ROI negative. Now, the purpose of his research was to say, well, the government should not be subsidizing student loan debt for
Mm-hmm.
students who are going to get negative ROI degrees. Maybe it should subsidize it for positive ROI degrees. I think that was his premise or takeaway. I think the more practical takeaways, and anyone, you can go look at this. Go look up Preston Cooper free op. He's got a free website. You can plug in the ROI of college degrees, and then a few years later, he actually updated it with all the master's degrees too, because
Nice.
biology in isolation is a negative ROI degree, but it usually often pairs with a positive ROI degree like medical school. So there's complexity that he then went on to figure out. So it's really interesting in there. So that's the tangent. I believe that what's going to happen over the next 20 years, the most likely scenario, is the government is going to stop funding at least some of these student loan debt. They're going to make it harder and make it privatized to some degree. And there will still be college. College is still a good investment for many, if not most, of the students who go there who plan to work 40 years. And go down that route. But if you're trying to get financially free, that math changes, right? Because you're not going to be
Mm-hmm.
working 40 years. So if you're trying
Yes,
to
it does.
retire 15 years, you got to factor that in. You still probably have a positive ROI if you're getting an engineering or economics degree or whatever. So again, don't factor that out, especially if you go to a great school and do that. Even at those high price points, the earnings differences are pretty large. But I
Yep.
think that's the way to think about it. And I think the long-term bet and implication it has for parents right now, like of young children like me, is I got to be ready to fund college if it does continue to keep pace with or grow faster than inflation. But it's
Mm-hmm.
probably a better bet that college will come down. College costs will reduce relative to inflation over the next 15 years. And for that
Yeah.
reason, I'm funding a 529 plan, but I'm not being super aggressive about it. If I'm wrong, I'll fund it with other post-tax assets and we can be a little less efficient. But I'm couching my bets a little bit for my two girls. I will fund a great private college education if that's what they want and that's where we get to. They will have
Mm-hmm.
that option. But I think there's a good chance that does not actually come to pass based on the long-term trends.
Yeah, I think for sure. I think what we're going to see is we've seen about as much inflation. As soon as the government gets involved and starts financing or funding, backing all of these degrees, college got more expensive. I think you can tie those two things together pretty clearly. I think what we're going to see over the next decade or so is we're actually going to lose colleges. I think there'll be some colleges that just shut down. They're not profitable
Well, we're
anymore.
already
When they
seeing that, right? I think
Yeah,
like
yeah.
hundreds of colleges have shut down in the last few years. Another factor that's going alongside that though is just the smaller number of high school graduates.
Yes. Yeah. Yeah, I think it's going to be really interesting to see some deflation in what was runaway tuition costs. Because it's really funny when Teresa was, I don't know, 6 or 7, and we started getting serious about saving money. I remember having a conversation with Olivia, my wife, and thinking that her 4-year degree would cost 100 grand, 80 to 100 grand at a good school, right? We had no idea where she'd go. It ended up being over $200,000, 13 years later or whatever it was. The inflation was crazy, and it was because the government got involved and colleges took advantage of that.
And
Let's kind of
I am not betting that college will come down to be $100,000 and
no, no, no,
adjusted for inflation. But
no.
I do think I will be surprised. I will be surprised and wrong if college is more than 200,000 for a good, more than 200,
Yes.
250,000 at a good elite,
Yep.
private school in 15 years, adjusted for today's dollars.
Yeah, adjusted for today's dollars being a key there. Well, let's close out on this because one of the things that's important to me, I know it's important to you, is to let people know that they still have control of their future. I think Set for Life is a great guidepost, even for folks starting today, whether you're in your early 20s or later in life. Do you still believe, in the American dream? Do you still think it's possible to build and retire early? Do you still have this fundamental belief, or are we just all robots that got to work for 40 years?
Well, I think that the American dream is alive and well. Most people who achieve it will come from a standing start with few assets and a median income,
Yep.
maybe even a little debt. And the people who actually go all out, even for just 3 to 5 years, some point in their life journey early on, hopefully, and
Mm-hmm.
just penny pinch, work the extra hours and grind it out, can get on the other side of the capitalism snowball. That's the whole
Yeah,
game, right?
that's the game.
That's all
That's the
Set
whole
for Life
game.
is about, is just here's how to go all out for years in a row to get on the other side of the capitalism game, where your asset base is now a more a 1%, 2% return on my asset base is way more than the
Yeah.
median or average American household salary at this point. And it's because of that work in the early years to get that
Yep.
going. There's a point where it can coast. And there's a point where it's just starting to run away. And
Yeah.
that's
Momentum is powerful.
but it's just so hard to see that when you're starting off again with median income and no assets. I was making 50 grand a year, 48 grand a year, my first job, maybe a couple thousand on top of that by moonlighting. And I just, like, the playbook had been handed to me. Like, Set for Life is not full of inventions, right? It's just the best bits and pieces of things I learned along the way from other sources, like Mr. Money Mustache and Your Money or Your Life and Rich Dad Poor Dad. And, like, there's all these different those playbooks exist. Set for Life is one repository of them. And there's plenty of folks who have taken that, like Craig Kurlop with the FI team, and he wrote a whole book on house hacking and took that to the next level and more advanced. So those playbooks exist, and they're getting more and more accessible in today's internet age. And I think that the challenge is you're going to have to go pretty hardcore, because people find these opportunities and go after them. You're going to have to just take the best that's out there and make a slight modification to take it to that next level. But if you do that, the opportunity to create that gap between you and the average person in your age and income bracket is just enormous, maybe even more enormous than it's ever been in American history, because that knowledge is there about how to refine and just take the absolute best opportunity and maximize it in today's environment. All that information's out there at your fingertips. You just have to go and seek it out and ignore all the distractions that are also there.
Yeah. Folks, at the end of the day, if you haven't already, go get the book Set for Life. You obviously get it at Bigger Pockets, likely on Amazon as well. I got to say, Scott, selfishly, I love the fact that you're no longer the CEO of Bigger Pockets, because that means you're easier to get a hold of. I get to talk to you more and get all these pearls of wisdom. So I'm glad you're no longer the CEO of Bigger Pockets. Thanks for you for coming here. Where can people find you?
You can still find me at Bigger Pockets. I'm doing Bigger Pockets, doing the Bigger Pockets Money podcast. My new LinkedIn title, I love this, is a semi-retired podcast co-host.
I love that.
That's the new title there. I'm the head of personal finance, is how we'll do that. And I'm kind of thinking about right now, what's that schedule going to look like? I'm sure I'll dive back in essentially full time pretty shortly here, because I love talking about this stuff and writing on it. So yeah, we'll be there, biggerpockets.com. And you can find me on the forums. You can find me at Scott_Trench on Instagram as well.
Awesome, buddy. I appreciate you. Take care.